What's up? All right, let's check things out, man. We got a lot going on, tons and tons of junk going on. So let's come over here to our good chart with our EMAs, see what's going on, check the monthly, see what's up. All right, so what do we got? Price action. All right, on the monthly. All right, you are still below your 50 EMA. All right, now you got this wick here. All right, you tend to take the wicks, all right? Just take a look at that real quick, all right? You tend to take the wicks. Although you got some wicks up here, all right? Comparable to this one, it's fine. All right, you got two stop and volume candles, all right? You got some green up here that you might want to come back and take, all right? Which lays around 32K. Cool, all right? It's totally possible that you got an M formation here, all right? And a drop level 1, and drop level 2, and you come up to fake everyone out, and then finally get that move down. All right, that is more or less what I'm thinking. All right, in the grand scheme of things. All right, you look at your indicators, and your momentum is to the upside on the monthly. All right, your money flow is curving up. Everything looks decent. All right, it does. All right, needless to say. All right, oh, that's my, I need that alert on. That's my big alert. All right. So, but first of all, 3 month. All right. 3 month time frame does not look bullish whatsoever. All right. Does not look bullish whatsoever. All right. So let's come over here. Let's see what's going on. All right. But you got your VWAP coming up. All right. Every time that kind of happens, you tend to get a pretty good bounce, right? So you take a look on your 3 month. You know, you had a curve here. All right. Bang rang, you had curve here, and now you have this curve up in here. All right, so I mean, just on that principle alone, you know, you got a pretty good move up, and then from here you got a pretty good move up. All right, so 3 month VWAP looking pretty good. All right, RSI curving up. All right, what is this? April 24th. I don't need any of that. Let's get rid of all of it. All right, so okay, cool. All right. Um, you know, I guess, but look, I still kind of stand by what I say here. Like you come over to the monthly, all right. Come back to the price action only. I mean, we know we got this double top, all right, and I don't know, man. I just don't trust it. I just don't trust what's going on in the world right now. All right. So, all right. Uh, one, two, three. All right. So look, just say V bottom. We'll draw a W because the W is a W. All right. All right. You got right out the gate. One, two, three. Rise up. Level one. This is all level one right here. Bangarang. Three huge candles right out the gate. First halving. What have you? All right. I believe. In fact, let's put that on. Let's put on the pi cycle indicator real quick and see what's up here for halvings. All right. Bangarang. All right. Let's go narrative style. All right. One. First halving. Level one. All right. Retrace. W formation. Beautiful. All right. Rise up level two. All right. Stop hunt low. Stop hunt. Stop hunt. Actually, it would be retrace. Stop hunt high. Stop hunt low. Right. M formation. All right. And really, what have you gotten as far as retraces go on the monthly? You really haven't gotten much. All right. So just realize that. Now your pi cycle bottom thing, is flashing. I totally get it. I totally get it. I totally get the bullish case that's going on right now. All right. I just don't know. I just don't know. All right. You really even haven't even gotten a retrace here. So, in the grand scheme of things, could this be the retrace on the monthly? right? Where you got your M formation. I mean, this is just straight drop if you really think about it on a monthly time frame. You know, straight drop, retrace, fake everyone out, coming back down, right? You know, like something crazy like this. Like that would not surprise me, man. That would not surprise me. You know, you can get a retrace up to like 50K. Why the hell not? You know, if you're going down, you're gonna have to build the momentum to get down into there. You know, or it's just up only. It's just up only for Bitcoin, which is good. You know, I'm down for up only. I'm down for an asset that only goes up, at like this forever and ever and ever. That's cool. You know, I mean, all right. So you can take a look at your price action on your monthly time frame, zoom it out a little bit, and see. You know, in the grander scheme of things here. All right, there you go. Look, better, right? Drop, retrace, drop. See, to me, this is retrace, and we got another level of drop, man. That's what I think. I think we got another level of drop. That's what I think. I really, really do. I really don't trust this at all. I don't trust this whatsoever. I know how it looks, all right, but I don't know. I just don't trust it, all right? So let's go over to... So look, first of all, you know, one thing is that your EMAs are everything. They are really everything, all right? And you got this cross here, all right? Your ketchup cross underneath your mustard, all right? That is a sell signal, all right? In EMA land, right? And the principal would have it that they are now done with this zone, all right? That the market makers, that this zone here, this is done. We're done with that. We're looking for lower prices. All right, that's in essence what that cross means. That we're looking for down here. All right, that's what that means. All right, I mean, and you can see it clear as day on the monthly. All right, where you got it up in here. All right, your ketchup crossed underneath your mustard. Where was it? Where did it cross? Oh, it's because this thing's on. Let me turn this thing off. Bang. Alright. Ketchup, cross underneath the mustard. You're done with this zone. That's in essence what that means. And you go to the new zone. Could you get a pump up to 32K? Absolutely. Absolutely. Because that's what they do. Alright. They manipulate price to get you to go one way and then they just bring it back down. 32K, that's a great trade. Fuck it. You know, whatever. But I'm not convinced. I'm just not convinced. Because of the structure of the price action here. All right, this is an M top. I mean, this is a bubble pop pattern. I'm still under that impression. All right. So yeah. So but then you know you're gonna have to build momentum. And one of the things that I do look at is my BLX chart. I do look at this chart a lot. Okay. So come on over to here. All right. My levels have been respected very, very nicely. Right, you got a nice bounce off this line, held it as support, slipped little deviation below, popped back up, but you got rejected again from this previous trend line. Here, actually, though, you got above it. All right, here was almost you didn't quite touch it. All right, you didn't quite touch it. You would think you would come back up and at least touch it. Now you come back up. All right, if you're coming back up. There is 28K there, and there's 28K there, but of course, like if it takes time, you know, you can come all the way back up into here, and in fact, you get this little green vector zone right there, you know, come make a return on whatever positions they left in here in that zone, and you're good to go. That could be your retrace. I see all of this green up in here. I do see that. All right, don't think I don't. But I also know that I do have some red down in here as well, somewhere on the weekly, right? Yeah. I got positions they can come back down into here. All right. This is on the table. This is still on the table, this red. I'm not worried as much about the red that's all the way down here, but it's an option. All right. I'll show you where it is. Right here. All right. There's some red down there. that they can come back down into. All right, I doubt it. All right, this is a huge level right here, a lot of volume. All right, big green spider line holding it as support. Black Swan event, you know, one of the worst things ever. Held it as support. All right, and it's not lost on me either that, like, you know, my BLX chart, like, this is all support to me. You know, these spider lines are support. For you to come down into there, you would need major momentum. Major momentum. All right, so, you know, let's just take a look at the Dow Jones real quick. All right, because I mean, where are you, Dow? Look, I've gone over this as well, all right, in previous videos. Like, the Dow Jones looks like it is in a massive need of a major correction. All right, like over its entire history. All right, it just looks like it is in massive need. All right, and I've gone over these boxes here. I'll go over the bigger ones first. All right. All right, look, big boxes here. Level 1, level 2, level 3. Massive imbalance in between. All right, massive imbalance. I know it sounds crazy that we're going to come down into there, right? That does sound crazy. Is that going to happen? I don't know. All right. Looks like I got a little Fibonacci here drawn out. What is this? Low to the high? Yeah, COVID to the top. That would be your 316 extension. All right. I know that sounds absolute madness. All right. But I mean, if you look, I mean, I got my big boxes, and then I got my little boxes inside my big boxes. Gotta love the boxes. All right. You know, level 1, level 2, level 3. I've gone over this. All right. I'm still thinking I'm in level 3 with a level 3. That's where I think I'm at. All right. Now, regardless of whatever happens, all right, you could still be in level 3 here, and you could be making your M. All right, for the Dow Jones. This could be a massive fake out where you can come back and make kind of like an all-time high and then come down. All right, later. All right, it doesn't have to happen now. It doesn't. This looks like, you know, this looks fake to me. All right, this looks like an M formation forming. All right, and there's not that much room to the upside. I mean, you're only going to make a slight deviation above this, you know. I mean, let's measure that out from here, I guess, right? It's only a 15% move in the Dow. You know, you can come up 20%, right? Come up 20% and then you fall. That would be just another drive of bearish divergence on the yearly, like we've been talking about, right? Or, you know, look at this freaking bear div, dude. Like, I'm not gonna stop talking about this. Like, this is huge. Look at that. Lower highs in your momentum waves, right? With higher highs in your price action from the previous bear market. You're looking for a major correction here. All right, that's what it is. You got the red dot. All right, I mean, I'm with that. All right, and you look at your dollar index. All right, just take a look at that. All right, we've gone over this many a time. All right, where we've gone over the levels. All right, here's a level. Right here, there's a level. Right, then you come back up into another level. Bang, right there. All right, and now you kind of just have this wick chilling up here, right, on the yearly, right, and price action is just chilling here at the top of the level. All right, and look at these yearly closes right here. Bang. All right, this is where your price action is, above the box. All right, you make a clean break into the new level. I mean, could that just be a V-top and you're coming down and the dollar's going to hell? That's very possible. But you would think you would at least spend some more time up in there, you know? You wouldn't spend just 1 year, multiple years. I mean, how many years are in this box? 1, 2, 3, 4, 5, 6, 7, right? You can count that, maybe 8, right? 8, I guess. 8 is a good number, actually. 1, 2, 3, 4, 5, 6, 7, 8. Another 8 years. All right. I don't know, man. I don't know. All right. So there's that. All right. Showed you the bear div. All right. Major volume coming in here. A lot of volume coming in here on the dollar. It's an interesting play. All right. Let's just get rid of all that. Fuck. All right. There's a lot going on. All right. Let's look at this. All right. You look at this on the weekly. This chart is extremely interesting. This is the yen. All right. The yen's market structure is interesting to me. All right. You got a rise up, level 1, retrace, rise up, level 2, retrace, and then formation, drop level 1, drop level 2. Now you haven't really made level 3 yet. Right? You really kind of haven't. I mean, you can say you have. It's a slightly lower low. This could be a V-shaped play, or this could be a W formation. All right? That's something to think about. All right? Now, the thing is, I found this. Where is it? I mean, I'll try to bring it up here. Hold on. Where are you? Let's see. All right, let's come over here. Is it this one? I found this guy. All right. He does the economic. He basically is like a pie cycle. All right. Oh, this is his other website. This one. Armstrong Economics. His name is Martin Armstrong. All right. And he's got this model. All right. He's got this model called the business model or the business cycle or whatever. All right. And he uses pi to predict, rises and falls of different things. Okay. Waves of creative destruction. Okay. It's very, very, very interesting stuff. I suggest you take a look. All right. ArmstrongEconomics.com. I have not slept because I'm just engulfed in all of this stuff. But basically, he's kind of a conspiracy theorist. I'm not going to lie. All right. So just take it with a grain of salt. There's no guarantees that what he's saying is coming true. However, he's got this model and some of the dates line up with some crazy ass price action. All right. So, the economic confidence model is a theory proposed by Martin Armstrong, a financial analyst who attempts to predict economic and political events based on a cyclical pattern of 8.6 years. According to this model, important dates for 2023 include, all right, January 18th. It makes the beginning of a major cycle that is expected to last until November 2034. All right. But this is basically like it's like an economic cycle in essence. All right. So, 8 years, right? 8 years. Remember the 8 years on the dollar, right? So it kind of feels like the dollar is going into an 8-year level 3 count up in here. We're going to chop around quite a bit. It doesn't mean that markets can't go up, but if the dollar is going to rise over the next 8 years, the markets really are going to go down. All right, but March 1st caught my eye. It was the midpoint of the 8.6 year cycle. It is considered a significant turning point in the ECM. He doesn't really tell you what these turning points are per se, but he does have a blog, and the blog is actually really interesting. All right, so he goes over he goes over the banking crisis and all that stuff. All right, and you can check that out. Where are you? Let's go back to this one. This is his private one. I don't want to get in trouble, but there's so much to consider. when what's going on with the world, because uh, I wish I've read through so many of these things. This is the U.S. blows up the Nord Stream pipeline as an act of war. All right. Is that just a cover up? Is all of this just a cover up because we're going to war? I mean, it kind of feels like what it is. I'm not gonna lie. Kind of feels like we're just covering up the fact that we're in a war. All right, that's kind of what it feels like. All right, he goes over that. All right, he goes over what a neocon is. It's like the shadow people that control the president and stuff. I'm probably gonna get banned off YouTube right now. Probably not gonna push out any of my videos. But yeah, like, and then he goes over the banking crisis, the unfolding of the banking crisis. All right. Let's see. Oh, I did this one already. Damn. He goes over a lot of stuff, man. He goes over a lot of stuff. I wish I had the graphic. Let me see if I can bring up the graphic real quick. The economic. What was it called? Oh man, I'm so tired, guys. I'm so tired. I'm probably not going to work today. All right, let's see. Models, right? We go to the models. Let's see. Economic confidence model. There it is. All right. He's got this thing. All right. An economic confidence model is an 8.6 year wave. It's based on like pi and all that stuff. All right. And this one went to 2020. All right. And he goes through, all the events that correlate with these pi dates. All right. And he talks about going from a public sector, right, to a private sector. And that would be the 80s. He expects the private sector to end in 2032, where we're going to get the fall of the American government and all that stuff. He thinks we're going to war and everything like that. It's a little bit crazy. All right. He goes over the real estate business cycle, and he actually like kind of predicted it. All right. But, real estate, this is interesting. 26-year contraction, right? So in 2007, he said that was the peak of real estate, right? And we should have made a lower high here, right? So let's just take a look at that. Let's back check that. Let's back check real estate. 2007, 2015, right? Let's look at our real estate chart. 2007. Right here. Here was your real estate crash, right? 2007, bang. 2015. Kind of made a higher high, man. Like he didn't really predict that shit. So just take everything that this guy says with a grain of salt. I mean, if you want to look at purely technicals, that's probably what we should be looking at. Purely technicals. All right. Look, X's on your weekly, seller exhaustion, trend reversal. All right. But in essence, you're still below your 200 EMA. All right. And there's another thing here. Where's my guy? Where are you? Beat the market maker. I don't have it on here. Let's just go to this guy right here. All right. This was interesting. All right. Where are you? What my man Steve talks about. Right here. Beat the market maker. All right. Videos. All right. You can come down to day 2. He talks about the trend.
Line next. Okay, probably going to receive it in a day or two when a lot of people. So don't use what I use unless. All right, I don't know what happened to the folder. It got buried here, and show you how you're supposed to be marking the charts. And actually, remember I showed you peak formation low, stop hunt, rise off of the low, hit the stops, hit the stop hunts, all the things. And I'm going to start breaking things down for you. Okay? Be in the box. Understand? Need some back. All right, but you know what? The target is that euro still must rise.
All right, look. A trend reset will be used for market makers to book a profit and not reverse directions. The reset will represent a new peak formation. 3 more days can be expected. However, no one falls for it. He may reverse after only one more level of rise slash fall. 4 or 5 levels might be identified. That is why we use a stop loss. All right. So interestingly enough, he goes over like he can change direction, but not really. You know, once the peak is identified, the trend bias will be in line with the peak for 3 days. All right. Where else was it?
Is that you get jacked up in your little section of the chart, right? Okay, someone's saying the screen's black. I see my screen. Yeah, okay. Floyd, log in, log out, buddy. Okay, so here, look. Back to where I was, right? This is how it's usually going to play out. The W is going to form, and then it goes into consolidation. This is level 1, day 1. The next day, he might do this. That's okay to trade that. He's not always going to give you a perfect WWW every day. If he gives it to you, it's a bonus. Hey, Dave, I didn't see you, man. Nice to see you here, buddy. If he gives it to you, it's a bonus. It makes it easier. Okay? That's what I'm talking about. I'm talking about that once the anchor point is set, then you, in fact, will understand the trend bias. Here we go. Anchor point, day 1, confirms second leg reversal, right? The second leg, or the multi-session W, spread out, confirms that the trend reversal is on. Okay, what do you mean, Steve? If he comes back for a second swipe at those people, and it's spread out like over a day or 2 days, let's say he hits the low Sunday, and it comes back in here on Monday. If he spreads that out over 2 days, he ain't doing that because it feels good. He's doing that because there's a ton of cash down there. And the way to get it is to go down there and pick up those orders and like scrape money off the sidewalk. So what happens is you get day 1, level 1 rise, right? Goes into consolidation. You have your 1, 2. You might have your aggressive move away. You might have a 3-day rise within the day 1. All right, hold on. You're going to love this. All right, time to go.
We love the Diet Coke.
At the end of the day, he goes back into consolidation. To end the day, he starts the cycle over, right? He then will make a V bottom. I was expecting this. If he does this, more power to you. It's better. But he may not always do that. So it's safe to make the entry off the railroad tracks because you're going to have your vector. 1, 2, 3 right out of the box. You might get a pivot laying there. Yesterday's tracer. Some things will be laying there. ADR low. Might be laying right there and give you an idea that, hey, the stop hunt should stall right here and the reversal's there. And then again, you have your 1, 2, 3. You may only get 2 levels in this example, right? If he comes out again and issues a V, I expect this. That's good. Now the expected move is this and reverse. Back into the range. What's the range? High minus the low divided by 2. It's going to be right about here. If it's a 300 pip move, you can expect about 150 pip retracement. Okay? The V could hit the mayonnaise. It could hit the watermark. Okay? That's the cycle. And it's the opposite cycle for the way down. Okay, now, keep this drawing in mind. Okay? Now let's look at a chart. It's kind of funny. I drew it like that. All right? You have what we call a 33 trade on the last day. Okay? And I'm going to show you that. The 33 trade is a very aggressive day that guarantees a reversal of about 50 to 100 pips minimum. Here's why. Okay, isn't this pattern not only the intraday pattern, but it sets the beginning stage for the week? Right? Back into consolidation. Vector 1, 2, 3 to the low. Morning star formation around the mayonnaise can be construed as a B bottom or a W, depending on how you want to look at that. Right past the mayo. Why would he come down past the mayo and close aggressively past the mayo and then snatch it right back in one bar? Because it works.
That's the part. where he talks about closing at the like the 100 yeah, the 100 the 200 EMA on the daily. All right, so let's just take a look on the daily. All right, here you are on the daily. All right, closes dailies below the 200 EMA. Right, and then he snatches it back up. It's so beautiful. Right, so like it just makes so much sense when you go back and you look, right, and you look at all of this, right. One, two, move up, move down. Can we expect, you know, two more, a little bit more? Can we expect a little bit more? It's possible. It's possible. So, keep this in mind. You got your 200 EMA, you know, we might be coming back above here, all right? We might be coming back above there. So just keep that in mind. I mean, in essence, you take a look, and he's got green candles to come back up into. All right. If I'm using my BLX chart, right? I got these two dates here for the pi cycle. I mean, I know that they're going to be. I know these are big dates. I know there's a war coming. I know things are happening. If this guy wants to book a profit, right? Because he's not going to be able to come back up into here, right? You have a big imbalance right here. All right. This is massive. All right. So it is possible. All right, that we have this kind of situation going on where you got your W formation, right? And this is just rise up level 1 consolidation. That's what this is, because this is stop hunt now, right here, bang. Hit that, right? Close dailies below the 200 EMA, right? Get everyone bearish, get everyone scared as hell, right? And then you're going to come back up, take out anyone trying to short the 800 EMA, or not, you come back up there, fill your shorts up in there, bangarang, come back down, stop hunt again, near the Mayo, but not quite touch it, all right? I would expect a bounce off one of these spider lines, probably this one right here that time, the higher low here, let the 200 come back up, finally to form another peak formation up into here, right? Because there's your 30, look like 37,000. And you could even come back up into there, fill out all this, it could be crazy. And he could reset it at any given time, but I do kind of expect this, and then kind of come back down into the range, 2023, and then from there, I don't know. This is a big date here, pi cycle date, all right, which is July 23rd, right? Now you can come down into there, come back down into here, and then bounce away. We don't know. We can only trade what we see. All right, we can only trade what we see. All right, so let's just dive into the the low time frames, see what the hell's going on. All right, you go into the hourly, you look back. This is to me a full cycle. All right, on the hourly chart, basically, all right? You got a mad move up, level 1, retrace, level 2, retrace, level 3, peak formation, drop level 1, retrace, drop level 2. This is still drop level 2, in my opinion. You really didn't get the retrace, right? So is this just a retrace back up into here, and you're coming down into there? That's very possible. Very, very possible. All right. And this can come way, way down. I got a target down there. It's at like 7.5K. So, just looking at the hourly, I don't see. It's tough too, because you look at this, right? You got a peak formation up in here, right? You got all this price action up in here. Weekend price action, don't really count it. This is weird peak formation right up in here. Right before the beginning of the week, you trap traders here, right? Trap traders, and then peak formation. You can draw it however you want. This whole thing could be the peak, right? But in essence, I'm just going to use this, right? But then you got drop, right? Drop, break a level, right? Retrace. That could be something, but then you got 1, 2, 3 hits to the low. So really, you could be like this: drop, retrace, drop, right? Where you get your V bottom. And you're coming back up. All right, 1, 2, 3 hits to the low. All right, it is all a possibility. It is all a possibility. All right, but in essence, this is a mad move, man. This is a mad move, and I don't trust it. Oh, look at what do we got going on for my trader's reality indicator. There it is. All right, what do we got going on for price action right now? London's coming out firing. London's not happy. Let's see what we got. I got a new indicator. All right, let's see what we got here. We got this guy on. Let's get some liquidation bands on. Let's throw on our strike zone. I got this new thing called strike zone. It's dope. Whoa. Where are you? I'm so tired. I have not slept. I think I'm going crazy with all this war stuff and nonsense. But with the banks, going down, everyone wants to talk about the banks, but no one wants to talk about the war. It doesn't make any sense. Where's my indicator, dude? Bitcoin kill zones. There it is. Put it on there. There it is. Right. It shows you, like, if you take off the market maker sessions, it'll show you, where they're going to be stop hunting. Right. Here's Asia. False move. I would wait. What is this? Oh, this is Frankfurt. Oh, this is Hong Kong. This is Asia. Alright, let's see. Let's put on the market maker sessions. Yeah. Yeah, see, we're in London right now. Right? London. See, this has Asia and London. This one. Let's look at the settings on this real quick. Inputs. I don't know. Let's keep that. Let's just keep this one on. All right, because in essence, it's where they're gonna stop hunt. All right. So we are in London. All right. I think Trader's Reality should have my session bar. Looks like we're gonna come down, but I don't trust it. You could just tap the daily open, then it comes spike back up. I expect 23.2. If we don't get 23.2, man, you could probably take a nice long at like 20,500. So let's see what happens here. Let's see what they come down and take. It might just come tap the daily open. Let's see what our hourly is. We should be we were at our 800, right? 800. So I don't get these kill zones. 8 o'clock. I mean, that's. Oh, Sydney. It's Sydney. That's why. All right. So this is their Asia kill zone. False move into Asia. Let's go back and look at these kill zones, man. All right. So where are they trying to kill you at? They kill you where? They don't kill you in London. There's no London kill zone. Is green London kill zone? It would be the Brinks box, really. I think it would be yellow. You know? Let's look at the what do you call it? The description here. Asian kill zone, London kill zone. Oh, there's daylight savings time today too. That's the thing. Oh, it's daylight savings. What a funny time to do all this nonsense during daylight savings. Yo, that's crazy. I know they mess with daylight savings, the market makers, mess the traders up. Yeah, my timing's all messed up. My timing is all messed up on this. It's tough. 2 to 4 is London. Right now it should be 2 to 4. See, but look at the kill zone is set at as if it's not. It's weird. We sprung ahead. So really it would be 3. This would be oh no, it's 5. So really it would be 4. I don't know. Doesn't matter. Maybe the kill zones will save for another time. Just wanted to see if they were working today. Nonetheless, as far as price action goes, I got a lot on the screen, so let's just take this guy off. Alright, what do we got here? I mean, liquidation bands on the hourly. It looks like, in the red here, you can see he's got all the 100 Xers trapped. He's just ripping them down right now. Ripping those mother truckers. Idiots. Who goes 100X in there? So, liquidations. This is 25X down into here. Let's go to the daily. Right there, 21,600 is the other one inside of the bands. Alright, in which you got a gap here that he needs to fill. Alright, let's go to the 4 hour. No gap in the 4 hour. I don't believe that. Where's my indicator, man? There it is. Let's go to the 15 minute. Yo, there it is. 15 minute, 50 EMA coming up. Honestly, you're probably coming down here to tag the 200 EMA on the 15 minute if it doesn't just nuke straight down. Let's look at the Dixie. See what Dixie's doing. Dixie has 2 gaps. There's a lot of gaps up in here, by the way. But it looks fairly bearish. 1, yeah, two hits to the. This looks like a level 2, right? From this M formation up here. Alright, let's go to the hourly though. Let's take off the bands. I love these little bands though. They give you a good thing for when you're like looking at Bitcoin or whatever, but for the Dixie, no big deal. Alright, so look. This is pretty simple. Alright, V bottom. Right, rise up. Level 1. Right here. Stop hunt. Rise up. Level 2. 2 waves. Alright. Let's see. 1, 2. This would be level 2 right here. Because you don't come back into the previous level, right? This is level 3. You got a peak formation. Yeah, here's your peak formation right here. I know you might see a W, but it's like you got 2, right? So this could be drop level 1. And you might book a retrace and mess everyone up. Drop level 2. Something like this. Come down, fill this gap. And then continue higher. That's possible. Let's put it on Renko. Let's see what we got on Renko. It's a little bit easier to see on Renko charts. 1, retrace. 2, retrace. 3, right? So now you got drop level 1. You would look for a retrace, or you could just come back up and say F you to everybody. F you to everybody. This is on the hourly for Bitcoin. And where are we at here with this price action? All right, I see it. All right. I love Renko charts at the moment. All right. Nice. Rising up. Drop level 1. Drop level 2. Ooh. When you look at it on the hourly, it looks a lot different, doesn't it? We know that this is level 2. All right. So, level 2. 1, 2. You dropped into the level. You didn't really get the retrace. That's why I'm looking kind of like you want to come up to 31,000. All right. You know, good level 2. 1, 2. You got 3 levels there. You know, 1, 2, 3. Come back up. I like it. I like the long. I do. Where are you at on your hourly Rinkos? You're in a nice uptrend. Oh, man. 4 hour up in an uptrend. 12 hour, waning a little bit. Let's see where you're at with your daily. Daily is not really confirmed green yet, but you're getting a green one. Go to Heikin-Ashi. Heikin-Ashi, obviously, you're going to change it up. 4 day, still in a downtrend. Stopping volume candle. That's good. Still got a lot of red down here though. Look at that. You know, you come over to your 4 day. You know, you got stopping volume down here, man. Slowing it down. I don't think that you're gonna come much lower. There's a lot going on down here. The only thing that's got me a little, you know, sketched out is the momentum waves. You know? But and your money flow's kind of coming out. Your VWAP is it turned up or down? It's turned. It's postured to the upside. That's good. I know the funding rates were absolutely like crazy negative. So let's just take a look at that. We'll see where the funding rates are at. We're good. Funding rates. Fund data. Funding rates premium. This isn't it. Where are you? I think it's this. Yeah. Let's go to the monthly. Weekly. This isn't it, man. I'm doing a terrible live, I know. I don't care. No one's watching. Nobody cares. There it is. Funding rates were mad negative. They were mad negative. Look at that. We're just getting me a positive funding rate here. Everyone's saying how they were negative. That's not negative. That's positive now. They were negative. Now it's just back to positive. You know? But it's not on the daily. I know I have another one over here. Let's see. Funding rate is positive at the moment for the 15 minutes. Let's go to the daily. Funding rate is positive on the daily. You were negative for a little bit. This isn't anything crazy, right? What are you looking for though? Oh, interesting. The order book has orders up here. Wow. Oh, it just disappeared. Get the fuck out of here. What the hell? No way. 4 hour? Where are you looking? Was it spoofing? Yeah, they're spoofing up there at 22.9. Yeah, see how it's coming on and off? They're spoofing that. This order hasn't gotten filled yet. Look at it, it's coming on and off. Mother truckers trying to get you to go long. Yeah, no, this is spoof. They're spoofing 1,000 Bitcoin, but really, you got mad liquidity down to the downside. You know, 900 or so. Is that 1.5? Well, look, 1.5K at 22.3. And you got another one at 22.8, right? And they're spoofing those orders up in the top. So, you know, keep that in mind. A little more volume here, like that, you know? You got, it's not as big as this though, but if you go to Coinbase, let's go to Coinbase. People were talking about the volume being a lot. Like, I don't see that. I don't see big volume going down. I see decreasing volume actually. I mean, you go to Binance, I guess, because it's on Binance. See, Binance had the volume, right? This is all of the exchanges. Not as much. This is a bunch of other ones. A little bit, but that includes Binance. Coinbase, yeah, not as much there. Just Bybit. Bybit, yeah, it's pretty good. You know? You went short, you close it out, you sell everybody along. Man, that looks terrible. That M. It does not look good. It does not look good. Let's see where we're at here on our daily RSI. All right. So, all right, look. Depending on where you come up to, all right. Right here. You got one little drive of hidden bearish divergence. Like the tiniest of tinies. It's very, very minute. Yeah, it's just a wick at the moment. All right, you got some bear div on your daily at your 50 EMA. All right. So you can get a wick. I'm telling you, you can get a wick up into here, 23.4 ish. You don't even have to take all of it. 23.2, 23.3 is what I'm looking for. 23.3 is what I'd be looking for a big rejection. All right. And now you have a massive vector here on the daily to come back down and take. All right. So they built another short here on the daily. All right. That is a short. We have some longs. Come back up. You've now closed out. You could have closed out this long, this long. You only have one more long here on the daily here. If you do want to come back down with gaps below you. All right. Gaps below you. Bear div. Oof. Banking crisis. All right. Any news? Oh no. They say reminds me of Terra Luna when the other guy was like, "I'm buying Bitcoin." Yo, that just reminded me. Look at this. All right, CZ. Oh, there's the model. All right. Confidence in government. Right. Right here. This is 2022 though. April. It's supposed to be going down. It's supposed to bottom. The confidence is supposed to bottom. We're supposed to get confidence at some point. So we'll see. Where's CZ at, man? CZ said something crazy. He said he was buying a bunch of Bitcoin. All right. Let me look him up. All right, look. A little sketch. I like this guy, I kind of do, but whatever. All right, giving Changeling stable coins and banks Binance will convert the remaining of the $1 billion Industry Recovery Initiative Fund to BUSD to native crypto, including BTC, BNB, ETH, and fund movements will occur, honoring transparency. It says he's buying. He's converting his stablecoin to this stuff, right? What was that other guy's name? Do Kwon, right? What was that? Do Kwon. Terra Luna. What was it? What was the guy's name? He was also up there converting. BTC. I don't know, man. I ain't going to work. I gotta call out in a little bit. Fuck it. 5 o'clock in the morning. Anyway, look. If you're into price predictions, 1, 2, 3 levels of drop. All right, 3 levels of drop. You're probably gonna get another 3 levels of rise. All right, V bottom. Come up in there. Wait. You don't go long here. At least wait for this, right? You don't go long here. You know what I would, if you want to go long, all right, you can wait to get past 23.4, right? And then wait and see. You can take a long from there. You come back up and then you pull back. You take the long here. All right. You can take the long from 19.7, but really, your best long is 18.5. Or I'm sorry, 16.5. 16.6. This would be a great long. Massive support. Massive. All right, but your biggest support line was right here. This is where you long from. All right, big long. All right, I'm out of here. Keep an eye on the war. That's what I'm gonna say.